In Wake Up Money, are you scared to invest? You know, there's been a lot of volatility in the stock market lately, but it may be time to jump back in. And if you need a little assistance, we brought in Pratik Patel this morning. He is from the Futures Room, dealing primarily with commodities. So I know that we've talked a little bit about that before in this particular segment, but just to break it down, what's the difference between typical stocks that people are used to, Fortune 500 companies, and commodities?
Commodities are more like those assets that you can buy and sell, the corn, soybean, wheat, oil, and gold. And so there are different kind of asset class that people trade or try to get into. And a way to get into that is through ETFs. It's kind of like a stock, but it tracks actual commodity as an index.
Okay, and that's what we're talking about today, because what is the difference between an ETF getting into that and getting into a commodity? You need a little bit more money to get into a commodity, right?
Correct, correct.
Okay.
Like an ETF is like a stock. So if an ETF, for example, that tracks gold is trading like at 129, it only costs you 129 to get into that ETF, versus if you want to trade the actual gold futures contract, it depends on margin, can be like in the thousands. So ETF's a little bit less money requirement to get into it, but it also tracks exact commodity futures. So it tracks it one for one.
That's great. And then is it riskier to get involved in that than it is commodities?
I would say ETF is a little bit less risk because it's an index, so it kind of tracks the overall gold futures, for example. It tracks the overall movement of it. So it's kind of like a little bit hedged, and so it's like you don't put too much money into it, it's less leverage.
So it's an index then that you can treat as a stock, right?
Correct.
You can put money into that. Commodities, are they doing well, or is it also a place where you can lose a lot of money these days?
Actually, it's doing really well right now. We've got a lot of commodities trading at multi-year highs, and so we're in a big boom rally on the commodities, especially the grain, gold, oil, and cotton has been extremely high for over 140-year high.
If you do want to get involved in commodities and commodity trading, how much money do you need to start, would you say, aside from ETF?
Average on commodities, I would say about $10,000.
$10,000.
Yes.
Okay, so it's a pretty big investment
Yes,
then that we're
is.
looking into.
Correct.
And then the future of that, still probably going to go strong, or just like the housing market, could we see people lose a lot of money in commodities?
I think it's going to be more cyclical. I mean, right now we have a weakening dollar, a lot of uncertainty in the economy, so a lot of people want to pour their stuff into something that's booming. And right now it's commodities, they're at year highs, so I feel like a lot of people will continue buying it until we see some technical resistance and we might snap back.
Okay, great. All right, Pratik, thanks for coming in. Pratik Patel from the Futures Room.